Yo, what up everyone? In this video, I want to recap and review the market so far this week. There's some really key lessons in here that we could use to implement for future trades and to take better setups. I also want to talk about how you have to go into the market without a bias up or down. And it's so important for you to just trade what the market's giving you, understanding its context, and using price and volume to make trading decisions because that's a serious edge. And using price and volume confluent with, obviously supply demand is a skill that could really compound you money for a while. Before we get into the recap though, I'm going to link my Instagram in the description below. I definitely recommend you to follow it at Trade. I post daily trading recaps on here along with very good trading tips and tricks that you're really not going to find anywhere else. The link to this is in the description below. You're missing out if you aren't following it. But now let's get right into the recap. First thing I want to get into is the NQ and ES action because there's a lot to learn, a lot of lessons to go over to understand the auction a little bit better and the type of analysis that needs to be done. So let's first get some more context in the pre-market plan. Overnight, we had a demand zone at 15461, which is this green box up here. I'm looking for us to hold above pre-market lows or bounce off of this zone to either balance or rally, and I'm going to be looking to play calls. We really did not have much supply above, and there really wasn't to a downside plan because we did have many demand zones lower. So one lesson right off the bat is I definitely recommend having both scenarios. I say this all the time. No one can predict what's going to happen in the market. In fact, the people and the traders that try to predict usually are the ones that take losses. Instead, plan out your levels, see how the market reacts to those levels, and then you react to the market's reaction, and that's when you take a trade as long as you manage your risk properly. So I definitely recommend having both sides. Today was a perfect lesson. I was feeling honestly pretty bullish, and I was watching this zone to hold, targeting this supply zone. Now another thing is the action from, let's go to yesterday, Friday's drop did create supply, but it missed it by a couple of ticks on mine. If I expand my time frames a little bit, there was supply somewhat in this area that technically we did reject, but that was definitely an opportunity that could have been taken. Now, also to get more context is last week's action. I said this in the webinar we did with members on Sunday night. Last week's action was kind of the first chapter to different things than what we have been seeing. And we have been seeing volatility come into the market, which are the conditions that I strive in. And we also have been seeing very aggressive sellers. How do we know we have sellers? We are putting in lower lows. We are putting in lower highs. We're failing to get above previous highs. We are seeing heavy selling pressure intraday. And every single day last week, for example, Wednesday, rejected the supply zone, sold off. Thursday, we opened up. We had a short rally into this supply zone, and we sold off. Friday, same exact thing. Had a rally into this supply zone, sold off. So 3 days, I think even on Tuesday, we rejected supply. 3 days to end last week. Every single day, there was an opportunity to play QQQ puts. And every single day there was an opportunity to play SPY puts as well. It had essentially the same context, which is why I prefer and I enjoy trading the market when I could read the auction and the context well. So now we have sellers built into the market. This morning or overnight, we were trading a little sideways. We were opening higher and we weren't just right close to that supply zone. Therefore, for me, playing an upside reversal would have not been valid. At this point, your job as an intraday trader is to react and see what's going on to find an entry with proper risk if you are playing to the downside and not trading off of supply. So the one thing I do want to say, and this is another lesson, is when we are at demand and buyers really aren't showing effort to bring us higher, it could be a sign of weak buying. It could also be a sign of very aggressive and heavy selling. So just referencing back to the ES chart because these kind of go hand in hand. At one point, I want to say 30 minutes into the market open or even like 40 minutes into the market open, we had an average of 800,000 lots traded compared to a daily average of 1.2-ish million, which is extremely low. So in the first half hour of 40 minutes, we saw some very heavy pressure coming into the market. And obviously it was selling pressure because we have heavy selling pressure on the volume and we have the market reacting to the downside. So that could have been another sign of other time frame sellers coming into the market. And you add the context of last week's action, that could kind of validate the point. So just going back to NQ, aggressive sell-off. Now, the way I look at this is if I'm buying puts, let's just say, let me take a screenshot of this so it's easier to see. Let's say I'm buying puts when the market is here. I'm short, long puts. If I were to get short up here, where would it make sense on the chart where I'm wrong? The only point that I could see right there is at this high. And for me, if I'm playing puts down here, this area is way too large of a stop loss to have any longevity. And if I do take this loss, it's going to be a big one because the risk to reward doesn't make sense. Now, if you're scalping, it's a completely different story because majority of the scalps work out right away. But if you are trend trading, it's going to be tougher because you have to make sure the risk to reward makes sense. Go back here. Same thing. If we're playing puts down here, we can't put our stop loss here, or we can't put it here because if the market goes back up here, that really doesn't prove our downside analysis incorrect because we still haven't hit off demand, and the market can keep going down. So you have to understand where your risk is, which is why I did not trend trade a move to the downside. On a day like today, I was scalping futures. Now, I do trade futures occasionally, but I just opened an IBKR account and I normally trade options. My funds have not completely settled into my account yet. I'm looking forward to getting into IBKR. If you guys want me to make videos about it, my setup, how I lay it all out and why I picked IBKR and the differences between TOS and E-Trade or another broker, comment in the comments below. I can make a video on that as well. But I did not trade options today. I was more focused on scalping futures because when there's volume, it's very easy to trade options or futures. Doesn't matter the instrument you trade. So then we sold off, and going back into the lesson about aggressive selling, we also now had weak buying in the market. How do I know it's weak buying? A failed rally out of demand got shut down, more heavy volume, and that indicates more downside. So now we're below this demand zone. It's invalid. At this point, when the market comes down, in the intraday commentary tab of the chat room, see if I can pull this up here. I was telling members that we cannot, if I'm still bearish below this high right here at 15440, just because I want the market to continue making lower highs. So I was going over weak buying here. Weakness at the lows, rally bounces fail, indicate weak buying. Watching for more selling pressure to head towards the lows. I'm going to look to play short ESNQ. As long as we fail to put in a higher high, I'm a bear as there's not much demand below, so more downside is possible. If we fail to take above the 15440 and 4463 on ES, I'm still bearish. Now, hit off demand again. You can scalp calls. I'm not against it. Again, today is more of a day that you have to scalp versus trend trade, in my opinion, as long as if you missed that overextended downside move, the open. And then pretty much we consolidated. There really were scalping opportunities in this range, but that first downside drop would have gave a lot of traders FOMO. And this is what I call FOMO hours after you miss that big move. So now this chart needs to be cleaned up a little bit, and the same analysis goes with ES. I said this in the webinar yesterday. I wanted an immediate reaction out of this 4456 zone. If we start moving lower into it, I'm less inclined to playing it to the long side. But this chart looks very similar where the first rally failed. We came into this demand, we bounced. This indicates a sign of weak buying and aggressive selling. Also confluent with a rejection off of VWAP, and I actually traded the S&P short after we rejected VWAP, stop above the high for a nice push below low a day, with some, nice volume down here at the lows. So that was the ES analysis. Let's see what happens tomorrow. But, the same context. We're rejecting supply continuously last week. Sellers are factored in. Don't get too bearish. Don't get too bullish. Stay on the sidelines if you can't read the context. What else? Okay, so there was another trade on Boeing. I wish I had options to trade this because this was a sick setup. A lot to learn here as well about the auction. So yesterday in the webinar, I said I'm watching this 211.18 zone. This was also in the pre-market plan. I said BA, it's not bad inside the used demand at 211. It's provided a nice bounce when we tested it. I also like how we broke below the previous low. I'll be a buyer on BA. I just need to find an entry intraday with proper risk to reward. We had supply at 212.81 and then a supply at 215.05. I'm going to avoid it to the sellers if we slice through it. So in the first half hour, there's a lot to learn. We bounced off this demand zone, heavy volume coming into the market. This is a valid long. And if you did get long down here, you should have at least took some profits off at this 212.81 supply zone. I can't talk like I was in this trade because I was not. So I'm only analyzing it. We rejected the supply zone and we started selling off below lower day. So let's put ourselves in a perspective of a buyer. We're long at demand. We take some profits here. Most likely our stop is going to be below this low where we will stop out. Now, if we're a good trader, we don't care about taking losing trades. More than likely, you should have re-entered once we broke the low inside of demand. Heavy buying pressure, it's a bullish sign, especially when supply gets tested. We come up, we consolidate near the highs, and we have another push up right into the 215 supply zone that I mentioned in the pre-market plan. And then we start selling off from this zone. We're obviously above the supply zone. But I want you all to, with any other trade, is if you stop out, maybe that area that you stop out at could be, at some point in the nearest future, another good opportunity to re-enter where your risk is even tighter than it was the first time and you have more confirmation. So never put your head down if you take a losing trade. Always look to re-enter because that could be the next best time to do so. So Boeing was a nice one today. This showed relative strength compared to the market as the Dow did hold up. I think we closed above like 250 today. Tuesday's another good lesson on to remove your bias. I don't care if you have a feeling. I don't care if you think the market's going up, think it's going down. Any intuition other than facts is irrelevant information. And it's either going to make you miss a move because you thought something else was going to happen, or you're going to take a trade because you thought something was going to happen and it's not based off of what the market's telling you. So today on NQ, the pre-market plan, we wanted a break above pre-market highs to target this supply zone at 154.94. This is on NQ. Obviously, we had the CPI numbers that came out, and that happened before the market opened up. We did hit the supply zone, and in the first 10 minutes, we did reject the supply and move lower. Now, overnight, we bounced off this demand zone, and we were flat and then moving up. So before the market did open up, this did look extremely bullish. Again, it's a look. It's not based off of facts. We did have supply here, and I was watching for the market to rally, create demand above, or slice through the supply and target the supply that was a little higher. Obviously, we sold off from this. We had demand down here, which we completely ignored and invalidated, then moved back up. This would be an area of supply that you could have short, just like yesterday, a failed rally, especially when you add the confluence about supply, and you could have had a nice short opportunity from this, and we moved down lower into this demand going into the close. Now, the same thing is happening on the S&P, and as I record this, the past, like I said earlier in this video, the past few days, we've been downtrending, sellers very aggressive, and demand zones have been less reliable. I'm going to update members in the Discord tonight about what I'm seeing and how I'm feeling and where I'm looking to trade in the market. But we cannot ignore the sell activity from sellers, especially at this downtrend line on the S&P today. We had demand lower, I think, in this area over here, and we closed at it today. But very aggressive sellers, demand zones to the downside are getting swept up, which is very healthy for the market. But you have to trade the facts that this downtrend line did reject, and we did sell off from the supply zone. This was unfortunately a missed opportunity for me today because this was a massive sell-off that you really could have capitalized, and SPY puts absolutely exploded. Another failed rally and another sell-off, making lower lows and lower highs. So the theme keeps repeating. This is why context is king. Nothing outbeats context. If you are a contextual trader, you could survive in any single market. Tesla today, this was a little strange of a setup. While NQ was selling off, Tesla was pretty strong. Now, we were coming into supply. We were holding VWAP. We also had two upper wick rejections inside of the supply zone. And this did have a nice sell-off from it as well. What else did we have? We had Boeing. Pull this up. Boeing was watching this to the long side, but the weakness in the market kind of nixed the setup for me, which is why it's so important to look at the market and why it's the easiest to trade the market in these conditions versus these equities because of its range and its volatility. I was watching a 216 break on Boeing today. We had this supply zone. I wanted us to get above. We also had strong buyers from yesterday, or decent buyers from yesterday. Unfortunately, 216 could not get above. Same thing like the S&P. We rejected this downtrend line, sold off lower into the demand zone. So we're definitely seeing a transition and a shift in the market. We can't get too comfortable. Always need to adapt to the context. But it's just different from what we have been seeing. And we have been seeing sellers get more aggressive. As you can see, we had 2.1 million lots traded today compared to a daily average of 1.2 million. So heavy volume coming into the market, which is good. These are conditions that I personally strive in. I enjoy trading these. They're the easiest to trade in, get very big gains, as long as you do not let your emotions or your gut feeling get in the way and you just respond to what the market gives you. So I'm going to leave you all on that note. Hit the like button on this video, subscribe if you haven't already, and if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra charge. But besides that, I'm ending it. Peace out.